Good afternoon or welcome to BizTech's Asian Midday Market Watch. Our guest today is Halley, Senior Market Analyst, Asia Pacific at OANDA. Now, Jeff, great to have you on the show again.
Wonderful to be here, Brian. Thank you very much.
Now, for all our audience today, Jeff is only on audio, so unfortunately, you're stuck with my pretty face. Now, before we talk to Jeff and get his insights, let's take a quick look and see how markets in the region are performing. We're going to start with the crypto market. Now, the Bitcoin and Ethereum have had a little pullback after their run-up. Bitcoin is at 36,837. It's down 3.85%. Ethereum is at 2,180.62. It's down 5.90%. Now, over across the region, close to home, we start with the SGX, which is at 3,154.66. It's up 0.5%. Bursa Malaysia is at 1,515.5. It's up 0.2%. We have the Nikkei, which is at 27,998.39. It's up 0.59%. The Shanghai Composite is at 3,472.4. It's up 0.14%. The Hang Seng is at 25,922.83. It's down 1.03%. And rounding up the numbers, we've got the the ASX 200, which is at 7,437.6. It's up 0.59%. Now, Jeff, what's your view on the market performance on the first half of the day?
Yeah, look, we'll just quickly touch on Bitcoin. It has fallen today because Amazon came out and formally said that they weren't looking at accepting cryptos as payments. That was the rumor sweeping the markets yesterday and powered quite a lot of the rally. But it has actually made quite a substantial technical breakout, Bitcoin. And as long as it holds above 34,000, the technicals point towards higher levels, whether you're a Bitcoin believer or not at this stage. So it's Amazon-induced volatility. Across stock markets across Asia, look, Chinese markets are down slightly, particularly Hong Kong, where a lot of the large property and China tech companies are listed. And I expect that they are going to weigh on Hong Kong's performance because of this regulatory crackdown that causes carnage in Chinese stock markets over the last two sessions. But the rest of Asia seems to have put that behind it. New York closed slightly higher ahead of some very heavyweight tech earnings due out today. And that sentiment seems to have flowed into regional markets, and we're seeing ex-China, most of Asia, slightly higher today. I also believe that because of that regulatory risk within China, that we are going to see investors redeploying funds from China markets and into other Asian markets because they still will want to have their Asian exposure.
Now, so Jeff, I wanted to drill down with you on that actually, because with the crackdown on tech, education, and the property sector, will there be alternatively then a flight back onto Wall Street on these sort of sectoral stocks?
Certainly, I think for the technology side, simply because the biggest tech companies in Asia that are listed are mostly Chinese tech companies. And if you look at someone like SEA, they're already listed in New York. And when you look at your big unicorns around Asia, such as Gojek and Grab, et cetera, they're unlisted at the moment. So investors don't have access to those stocks. I think India may benefit because there are a lot of unicorn listings going on there. But certainly I believe if you want to have tech exposure, then the US will be the obvious beneficiary, because if it's too risky to be involved in China, there really isn't a lot of alternatives for these large-sized technology companies available.
Okay, and that's interesting because, as you pointed out correctly, while there are no options for big tech investments for ASEAN, that's going to change in the next few weeks because there are a few specs that are coming up, and that really would kind of change the opportunity and the availability of investment options for US investors.
Yeah, definitely, but not just US investors, for regional investors as well. And Gojek is looking at, I think, doing an IPO in Jakarta and New York. I'm not quite sure how they're going to get that one done later in the year. So there will be more opportunities, I believe. And in fact, it may actually push some of these listings forward time-wise now, because if the China market is really either closed because of regulatory risk or is just regarded as just too much like hard work, then those valuations are going to improve in other parts of Asia, and that could bring some of those technology listings that may have come next year forward into this year. So there will be options, but we're going to have to be a little bit patient. And I think in the meantime, your obvious places to look are India, where we are seeing a lot of listings, but they have restrictions moving money in and out, and of course the United States.
Now, speaking of the United States, this week, tech earnings are going to dominate. Who are you watching out for?
Today, we've got the first of the FANGs. We've got Apple, Alphabet, and Microsoft, and I believe it's Facebook and Amazon tomorrow. Of the three today, I think Apple will be the most interesting, certainly because it produces a lot more hardware than the other two. And so we're going to be looking for their projections for the iPhone 5G sales, but also we'll want to see whether they're actually predicting disruptions and thus a loss of sales due to these supply chain constraints that we're seeing all over the world at the moment, particularly in microprocessors. So although we're expecting excellent results, I think the risk is perhaps that if Apple sounds some warnings, we could see a temporary pullback in some of these big technology stocks. But overall, I think the results are going to be magnificent and they're going to remain buys on dips.
Now, what are you looking out for the second half of the day as well as the rest of the week that could move markets?
Yeah, I think the rest of the day is going to be reasonably quiet because the data calendar is very, very thin ahead of these earnings that are coming out in the US this evening. That will leave the market at the mercy of headline-driven volatility. And at the moment, it looks like a pretty quiet news day. If we look into the second half of the week, FANG earnings aside, we do have an FOMC policy meeting. This one's been a bit of a quiet one. Now, there is a chance, I believe, that they may mention the dreaded taper word in the language of the statement or tweak the language of the statement. The market is pricing no change to the statement language, but if they do, that could cause a temporary sell-off in stocks and see bond rates rise at the end of the week. So that would be the main risk. I put it more sort of 50-50 at this stage for that one. I think the Fed meeting in September will definitely be live. I'm not expecting much from this one, but they have surprised us in the past. So we can't just say we can't just dismiss it, shall we say? Yeah, there is a risk towards the end of the week.
Now, Jeff, thanks for coming on the show.
My pleasure. Thanks, Brian.
Now, we've been speaking to Jeffrey Halley, the Senior Market Analyst, Asia Pacific at OANDA on BizTech Asian Midday Market Watch. I'm Brian Fernandez. This video will be on our Facebook and LinkedIn pages, as well as our website, www.biztech.asia. Please subscribe and like our various platforms. Thanks a lot for tuning in.